And it's all about the budgets now. See, the Delta State's Governor, Sheriff Oborowori, has presented a budget of 936 billion naira appropriation bill for the year 2025 fiscal year to the State House of Assembly, with an increase of 29% of the approved sum of 725 billion naira for the year 2024. The budget is christened Budget of Fiscal Consolidation. Is made up of recurrent expenditure of 348 billion naira, representing 37%, and capital expenditure of 587 billion naira, representing about 62% of the total budget. And we see the federal government has unveiled the proposed budget of 47.9 trillion naira for the 2025 fiscal year. The Ministry of Budget and Economic Planning, Senator Atiku Bagudu, disclosed this to journalists following the Federal Executive Council meeting chaired by President Bola Tinubu. He adds that the council has approved the medium-term expenditure framework, MTEF, for 2025-2027. According to the minister, FEC has pegged the crude oil benchmark at $75 per barrel with an oil production target of 2.06 million barrels per day. All right, that leads us to our next conversation now. That's our first conversation with Mr. Bismarck Rewane. Great to have you, Mr. Rewane. It's that season again. We're getting plans, spending plans by governments for 2025. And we have over 200 billion Nigerians, and the budget is equivalent to $28 billion. What are your thoughts on this?
Well, that's good morning, and thank you for having me. The budget actually went from 30 trillion last year to 48 trillion naira this year. But if you add the supplementary budget of last year, which is 2024, you had the total budgetary expenditure, both supplementary and nominal, comes to 37 trillion naira, 34 trillion naira. Now, the budget in dollar terms, and basically the exchange rate that was used last year was 800 naira to a dollar. This year, we are using 1,400 naira to a dollar. So in dollar terms, the total expenditure declined by 27%. In naira nominal terms, the expenditure increased by 35%. So what have we done here? Simple arithmetic means that the total budget of last year, you just increase it by the level of inflation, average level of inflation, about 33%, and you got exactly what you have, which is 48 trillion naira. So if you discount for inflation, there's been no growth. If you dollarize the budget, there was a 27% decline in total expenditure. But interestingly, the growth projections for the budget for 2025, we're expecting to grow at 4.6%, which is higher than 3.8%, which we projected last year. We projected 3.8 last year, but we achieved 3.1%. The inflation target for last year was 21.4. The actual inflation is about 33, 34%. This year, there's no figure for inflation in the projected budget. Again, like I said earlier, the exchange rate last year was 800 naira target. This year, the target is 1,400. What is the relevance of using 1,400 as the projected exchange rate? You and I know that the true value on a PPP basis for the naira is about 1,100. We know that the market today is trading at 1,735. What the federal government is saying is that, yes, we realize that the naira dollar value will not go to its PPP value, but we are realistic enough to know that we are putting it at 1,400, which is what the aspiration is. But if last year you budgeted at 800 and the actual outcome was 50% lower, which is it came out at about 1,700, then we have to be careful with the budgeting and our expectations for next year. One other very important point is that the oil production last year target was 1.78. Our average throughout the year was about 1.3 million barrels. Today, the budget is being based on a production level of 2.06 million barrels a day. Is this realistic in the context of the new leadership in the United States? Is it realistic in the context of the new budget and OPEC framework? Is it realistic if we are assuming that there will be no vandalism in the Niger Delta? Now, the other very important factor is the crude oil price. The crude oil price projection last year was $77. In actuality, we came in slightly above that, maybe about $81, $82 per barrel throughout the year average. This year, we are budgeting $75 a barrel. As we speak, and you just said it, the price of oil is much lower than that. In a Trump dispensation, we do not expect the price of oil to be at 75. Therefore, I think that the budget benchmark price, based on which we have excess crude, anything above it, must be brought down to near $65 or $60 a barrel, so that you have some headroom. Now, what does this all mean at the end of the day? We are budgeting for a deficit, and the deficit amount is, we are budgeting for a deficit, and we have been silent on the inflation target. And so consistently over the years, and that has been a norm, we've always spent more than what we earned. But this time, I think the earnings are going to be much stronger because of the reduction in subsidies, because of the reduction in, theoretically, reduction in leakages, right? And a strengthening of the basic format of fiscal consolidation will take place. So, generally speaking, it's early days. We have the medium-term expenditure framework. We have the budget for 2025. It has to go through Parliament, which is the National Assembly, and the committees will play around with it.
Right.
I expect that there will be an increase of some sort, but generally speaking, it's a balance. It's something that is useful and can be worked with to achieve macroeconomic stability in 2025.
Right. I guess the assumptions are quite interesting, and maybe hopefully if there's some kind of bull run with oil prices, then we might be able to get that benchmark. But on the other side, we see the IMF has downgraded Nigeria's growth outlook by about 0.2%, but they expect some kind of rebound in 2025.
Yes, the IMF have what they call the regional outlook, which they release every October and April. The October report was launched yesterday at the Lagos Business School. And the theme of this report was reforms amid great expectations. Reforms amid great expectations. And what they tried to do was to analyze the region of Africa and try to see the similarity between what's happening in Africa and what's happening in Nigeria in particular. So one of the key elements they discussed was macroeconomic imbalances are gradually easing, and thanks to policy adjustments. Most African countries, including Nigeria, are carrying out some adjustments and reform adjustments, like ours, subsidy reduction, and so on and so forth. Inflation has declined in many countries, but challenges remain. You notice that in the case of Nigeria, there have been 2 months of decline, and then we're going to have inflation numbers, I think, sometime today. There'll be a likely increase. So there's some heterogeneity, that is the difference between some countries and others. According to the IMF, exchange rate pressures are partially eased since January. Therefore, if you look at Nigeria, for example, exchange rate pressures built, and the Naira traded at 1,910 per dollar. Now it has appreciated, so to speak. It went all the way to 1,200, and now it's trading at about 1,735. Now, in terms of growth, they think that output constraints exist, but there are various things that have to happen. We're talking about international bond markets have reopened, and borrowing costs are still elevated, and funding needs remain high. That applies to Nigeria as well. Growth is expected to pick up modestly, the word modestly in 2025, but with significant differences between countries. What came out is that resource-intensive countries, like those who depend on oil, lithium, copper, gold, are performing less. Their performance is less efficient than those who are not resource-dependent. In other words, those countries that are not naturally endowed are working harder and achieving better results. But again, that is a 2025 outlook. Now, there's some divergence and also some risks. The risks they noticed across Africa were climate shocks, which we are seeing even in late November. Last night, there was a massive rainfall in Lagos. Mpox spreading, that's a major issue. Volatility in commodity prices, we are going to see more of that now that there's a stalemate in Ukraine and that we are going to have a Trump presidency. So volatility in commodity prices. A slowdown in advanced economies. China has already reported today that the economy is slowing down and they're having a property problem. And then more than anything else, volatile financial markets, which could lead to high sovereign risk premium. So for countries like Nigeria who are going to the markets to raise money, we have to agree with that hypothesis that one, the cost of borrowing is going to increase. Two, that the commodity prices are going to be volatile, and therefore we cannot predict what's going to happen. And three, we have to manage our resources efficiently. Right? And they ended up with the whole idea that no easy choices, but inaction is not an option. In other words, there are no easy choices, but doing nothing is not an option. We have to do something. It's better to do the wrong thing and change than to do nothing and accept that there will be no outcomes.
Right. Very interesting expectations there for resource-rich countries. I guess that's where the resource curse comes into play. But thank you so much, Mr. Bismarck Rewane. Always great having your perspective.
Thank you very much for having me.